Ladies and gentlemen, welcome back to the channel. This video is all about July 23rd, Tesla's earnings. Now, there's some very weird things to discuss in this video. For an example, the puts are more expensive than the calls. Option activity is favoring a downside move in Tesla. That makes sense to me because Wall Street is pretty uniformly bearish on Tesla heading into Tesla earnings. That is a huge positive, okay? In this video, I will go over what really matters for Tesla earnings, my expectation around the stock, what Wall Street is expecting out of Tesla earnings, and more, including the technical setup that we have here looks increasingly better and better. Like, for an example, we have a return of a positive MACD, okay? When the MACD is positive, that tends to be a really good sign. Specifically, when you get a break of the MACD line above the signal line here, that tends to historically lead to some pretty strong rallies. And that just happened over the last couple of days. So we will get into all of this in this video. Ladies and gentlemen, hit that like button and subscribe to the channel if you haven't not done so already. If you guys want to see the options trade that I made on Tesla stock for earnings, check out that link down below in the description of this video. We like to trade options over there around earnings, around major events. I consider myself more of a sniper. I don't like to over trade options because that's how you kill portfolios. I'm sure a lot of you guys agree with that. But when there is opportunities, when I find distortions in the market, I like to exploit those. And I think that's exactly what we are seeing with Tesla. So let's go ahead and get into this. First and foremost, I want to start with this article from Barclays. It says, "Dear Tesla stock fans, mark your calendars for July 23rd. Now, they go over deliveries, how deliveries fell, all of that. It really doesn't matter, okay? Even the EPS numbers don't really matter. Margin numbers don't really matter for Tesla. Like, Tesla normally moves like 1 to 2% at 4 o'clock when the report actually comes out based on EPS and based on margins. If margins are better than expected, the stock's going to go up a little bit. If they're worse than expected, the stock's going to fall a little bit before the conference call. But it's really the conference call that matters. So here we have it. Consensus estimates project double-digit declines in both Tesla's revenue and earnings. Analysts expect earnings per share of 41 cents, down 21.72% year over year, and revised from the initial Q2 estimate of 85 cents at the start of the year on revenue of $22.36 billion, representing a 12.32% drop. So I'll tell you right now, Wall Street is already pretty fundamentally negative on Tesla. Like, you don't have high expectations at all for Tesla's earnings. Also worth mentioning is that management stated they would, quote, revise our 2025 guidance in our Q2 update, making next week's call particularly important. Investors will also be looking for updates on the more affordable Tesla model originally slated for launch in the first half of the year, as well as the company's outlook on the loss of EV tax credits and the potential impact on margins. I mean, like, the fact that robotaxi was not the first thing mentioned here is kind of wild. Like, that is the thing that really matters for Tesla stock and for earnings. Meanwhile, UBS reaffirmed its sell rating on Monday, July 14th, with a $215 price target ahead of Tesla's Q2 earnings, describing the stock as fundamentally overvalued. We see deteriorating fundamentals in the auto business, the removal of the 100% margin credit revenue, likely negative revisions to estimates, and a CEO that is arguably distracted from the business. This is why I say, like, the stock is only priced for like 500 robotaxis out on the road next year. Maybe. Okay. If we start to hear, which I'm sure we will, tens of thousands of robotaxis are going to be out on the road next year, or hundreds of thousands, as Elon said back in May. Wall Street's going to have to start pricing some of that in, right? You can't just not price anything in. Like if Elon says 100,000 robotaxis out on the road next year, I don't care if you want to discount that by 90%, you're still going to have to price in what could be 10,000 robotaxis out on the road next year, okay? That's going to be a huge positive. Now, I imagine a scenario where, Tesla says more affordable models are coming by the end of this year. The Model L or the Model YL, the Model 3 Plus are also coming to the US. That's going to be good news. And again, we have tens of thousands of robotaxis, if not hundreds of thousands of robotaxis out on the road next year. Mix all of that together, you have a very positive backdrop for earnings coming, considering the stock is not pricing in anything material for robotaxi. Like UBS didn't even mention robotaxi. Like Wall Street is completely asleep at the wheel. Now, options sentiment on Tesla stock. Examining the July 25th, 2025 options chain. First, after the earnings report, at the 322.50 call, has a bid-ask spread of $13.10 and $13.20. The put option shows a spread of $13.50 to $13.60. So the put is actually like $40 or $50 more expensive than the call. Wall Street is placing a greater kind of skew to the put side. That is crazy to me. What's even crazier here is when you actually add up these two options and divide it by the price of the stock, that's how you figure out what a stock is pricing in for any given expiration. Tesla stock is only pricing in 8.3% of a move between now and next Friday. Only an 8% move in Tesla? I think we could move 20% to the upside on Tesla earnings. If we get disappointing robotaxi guidance and disappointing full year guidance and Model 2 is not coming until next year, I expect Tesla would be down more than 10%. So I think there could be an opportunity on both sides. If you are a super bear and you think all things are going to go bad, Elon's going to be bearish, he's not going to say anything positive about robotaxi, which I think you have to be pretty ill-informed to believe that. Elon tends to be very optimistic on earnings calls. Then I think there would even be an opportunity to the downside. This earnings to me really seems weird in the sense of you're not pricing in a big move at all from Tesla. Now, again, I think we could get 20% upside because I think the Model 2 is coming this year. I think Tesla is not going to be too worried about the ZEV credits, right? The EV credits that automakers have to buy. Like, was that ever a core thesis to own Tesla? No. Most of Wall Street excludes those credits from the margin story of Tesla anyways. When Tesla reports margins, they say, okay, margins were good, but if you exclude the credits, Tesla's margins were not good, right? So did the credits ever really matter? Not really. Again, I see a scenario where Model 2 is coming. Other variants are coming by the end of this year in the US market as well, like the Model YL. And we get a scenario where Elon says we could have 100,000 robotaxis out on the road next year and be in dozens of cities. With what I'm currently seeing, that is going to be a massive catalyst for Tesla stock. Where, again, if the stock was pricing in like a 15% move, like it normally does around earnings, like a 12 to 15% move is pretty typical, then I would say the opportunity is maybe not as large. Like you're kind of pricing in what could be a big upside or big downside move. But Tesla stock is really not pricing in much, okay? Now, Goldman Sachs recently weighed in on Tesla stock amid new SUV reveal. They say Well, Goldman Sachs analyst Mark Delaney, ranked among the top 3% of Wall Street stock experts, viewed the Model Y L as an incremental positive that could help Tesla strengthen its foothold in the SUV segment, not just in China, but eventually in the US and Europe as well. It says a central debate among investors has been how much the upcoming Tesla models in the back half of 2025 will drive meaningful growth. Delaney believes the Model Y L is more differentiated than many had expected, particularly given subdued expectations set during the Q1 earnings call. Rather than a cost-reduced, scaled-down Model Y, Tesla delivered something targeted, the three-row SUV market, a surprising move that could open new demand channels. Delaney still expects a lower-cost Model Y or Model 3 variant to be introduced later this year, aligning with prior management hints. But again, according to Delaney, Goldman Sachs analyst maintains a neutral rating on Tesla with a $285 price target. That would be downside of about 11% from current levels. So, like, he's still not, like, bullish on Tesla stock by any means. Barclays here reiterates a $275 price target, calls earnings setup, quote, confusing. I don't know what's confusing about it, but they say, quote, the setup for Tesla into Q2 EPS is confusing. Similar to Q1, however, net, we see potential for the stock to outperform. That's great. On the one hand, Tesla faces questions on increasingly weaker fundamentals. While we expect Q2 auto margin, excluding credits, to be improved quarter over quarter, it will likely remain depressed versus prior years. And amid a soft first half on 2025 volume, Tesla now is on track for a meaningful volume decline in 2025. We forecast down 10%. The fundamental setup is a sharp contrast to the elevated hopes from late 2024, whereas 2025 EPS was over $3.20 into the beginning of the year and is now down to $1.84. I want you guys to pay attention to the main theme here, okay? In all of these articles, nobody is talking about the robotaxi. Like, I feel like I'm in like the Twilight Zone. Like, I'm like, why is nobody talking about this? Like, are they like sleepwalking? Like what's going on? Are people actually like using their brains? Am I the only one that has a couple brain cells up there? Like, that's how it feels to me. Because Wall Street right now, they're talking about the things that really don't matter for Tesla, like deliveries. The idea is Tesla every year is going to grow the amount of vehicles they have out on the road that can be essentially, rolling robots. And Tesla is going to use the cars, essentially, the platform base, to scale other technologies, kind of like Apple does, right? The more devices Apple has out there, the more they can make from services revenue, right? Kind of the same kind of thing, right? The more vehicles are out there, the more people that buy FSD, the more robotaxis can be out on the road one day. Now we're actually getting to robotaxis, and people are still focused on a 10% vehicle decline year over year, when, the auto industry has some of the lowest margins imaginable. Like, who cares about the car business? We're looking at software-like margins in robotaxi, which is going to scale dramatically in the next 12 months, 24 months. And nobody cares now? It's weird to me. It doesn't really make much sense. And, we could sit here and look at all these articles, but again, when we look at the options chain, that's actually being priced into the stock. Like, nobody cares about robotaxi. I think the cat is right by the camera. He's about to knock it over. Like, nobody cares about robotaxi right now. But that's the only thing that matters. Now, for an example, if we have 100,000 robotaxis out on the road next year, times $100 in revenue a piece, that's $10 million a day. Times 365 days a year, that is $3.65 billion of revenue potential from 100,000 robotaxis out on the road, which The revenue number could be well over $100. It could be $150 for a whole 24-hour period. It could be $200 or $300. I'm just trying to be super conservative here. Okay, if we give it software like margins, right, times that by 70%, say 70% margins, that could be $2.55 billion in gross profits. Net profits, who knows where that would equal out at, but 2.55 billion in, let's call it, profits, like divided by 3.3 billion shares outstanding, that's 77 cents of EPS times by like 150 times multiple. That all of a sudden adds $116 to the value of Tesla stock, not pricing in what the future could look like, which the markets are always a discounting mechanism. So I think there is a massive opportunity here for investors right now that are actually bullish on Tesla. In fact, I have not been this bullish on Tesla heading into an earnings report in a long time. Why? Because people are so negative on Tesla. The expectations are already negative. Like, is Tesla going to surprise us with even worse guidance? Like, I think that's going to be difficult to do. Okay. Even look at Evercore ISI. They reiterated the stock is in line. The firm said it's staying cautious on Tesla shares. They say, quote, "We believe the stock today is increasingly both noise and signal based on, one, unabated negative revisions." Okay, fine. Nobody should give a crap about the car business at this stage. It's kind of like Apple. You just want to get as many cars out there or devices out there as possible so you can upsell services in the future, right? That's the idea. Tesla was never an auto company. So even to see ISI say that, Evercore, is like, that makes me bullish. Number two, disappointing AV rollout. Like, how can you call the robotaxi rollout at this point disappointing? Like, we already have a geofenced area at Austin that took Waymo years to achieve. I don't know how that's disappointing. But again, as we get 100,000 robotaxi guidance from Elon Musk for next year, as I probably think that's what he's going to say. I think you have to discount that 50%, 90%, something like that. You're still looking at thousands of robotaxis, tens of thousands of robotaxis out on the road next year. Okay. I wouldn't call that disappointing by any stretch of the imagination. Number three, increasingly divisive political posting. I get that. And technicals on edge. I don't know what technicals they're talking about. Again, the MACD just went positive a couple days ago. Okay. Historically, when this happens, it's very positive for Tesla stock. Sure, can it be rocky for a period? Of course. But you tend to see a very sizable rally in Tesla stock once you get that positive divergence on the MACD. You have not been positive on the MACD since May 30th. May 30th. Okay. About 2 months now. You're finally positive again for the last 3 days. The technicals look like they are getting better for Tesla. Tesla also just broke above the 50-day moving average and closed above it on Friday. Whereas you were getting a lot of rejection at the 50-day moving average, really going back to, July 2nd, but in the last 1, 2, 3, 4 trading days, Monday, Tuesday, Wednesday, Thursday, you got rejected at the 50-day moving average, did not close above that, now you closed above it. I don't know what is looking bad about the technicals. I think they look really damn good. Now, what's also interesting is even from a retail perspective, the message volume over on StockTwits is down like 28% in the last week. Sentiment from retail investors is neutral at 45, and message volume is coming in low at 42. That also makes me very optimistic, because if retail is not that positive on Tesla, they're not like jumping over each other to buy the stock heading into earnings. Okay, that's maybe it's too good to be true, right? Because I like to get in on things at the ground floor. Okay, that's what I'm about in the trading community. That is the most unique service provided imaginable. Nobody else is doing what we're doing. What we're doing is going out and finding small cap stocks that have value in plain sight, but nobody's paying attention, essentially, is the long story short. So we go out, we look at AI stocks, energy stocks, biopharma stocks, robotics stocks, the smaller cap names, the up-and-coming companies, and invest in the good ones. That's kind of the long story short, in a nutshell, what we're doing over in the trading community. We do have some crypto exposure as well, like crypto stock exposure. But that normally only happens in small companies. I see the same thing happening right now in Tesla, where I'm like, are we in the twilight zone here? Am I the only one that remembers what Elon said back in May? The guidance for robotaxi he set then, which was hundreds of thousands, if not millions of robotaxis out on the road next year. Now, do I think we're going to have hundreds of thousands of robotaxis out on the road next year? Probably not. But just hearing that is so far from consensus. I think it, at least at bare minimum, gives you a pretty violent short-term rally in Tesla. I think Tesla stock could be up over 20%. Okay? Like Wednesday after hours. The stock could be up huge as Elon gives us guidance for 100,000 robotaxis out on the road next year in dozens of different cities. I mean, maybe I'm the only one that like understands this. I know some of you guys do as well, but Wall Street definitely does not. But again, if you guys want to come join the trading community, come take a look at the trade I made on Tesla for Tesla's earnings. That link is down below in the description of this video. You know, and just to really like wrap up this video and conclude it, I have not been this bullish on an earnings report from Tesla in a long time. Okay. Because of the guidance we're going to get on robotaxi, I think it's going to be like substantial, hundreds of thousands. Elon might say 1 million, something crazy, but again, hundreds of thousands for robotaxi. Like Wall Street is pricing in like 500 robotaxis for the stock right now. If it was pricing in anything close to what I'm saying in this video or what Elon has previously said, the stock would be like 600 plus per share right now. So I can tell you right now, you're not pricing in anything grand for robotaxi. Nobody's even talking about it from a hedge fund and institutional perspective. I think, again, the cheaper variant of the, Tesla product line is coming by the end of this year. I don't think there's going to be any change to that. I think Wall Street's already pricing in a pretty rough guidance number for full year deliveries. Like if it's going to be hard to disappoint from that perspective. Wall Street already has low expectations. The Model YL coming, the Model 3 Plus coming. When I put all of that together, I don't really see where the downside surprise is going to come from unless Elon were to come out and just say, hey, we're having a lot of issues trying to scale the robotaxi network. It's not going as smoothly as expected. Maybe we have 10,000 robotaxis out on the road next year. Like if you discount what Elon says 90%, which I think a lot of Wall Street does, they say, hey, 10% of what Elon says is true, 90% is fluff. Then you get like 1,000 robotaxis out on the road next year. I don't know if that's enough to give you like a massive rally if everything else is bad, right? Like that's the more negative scenario. But in what world does Elon come on earnings calls and just downplay everything that Tesla's doing? Like, that's not what Elon typically does. So, again, I'm super bullish on this earnings from Tesla. Not the numbers, none of that, not really even the forward guidance. I think it's going to be a lot of status quo as far as the Model 2. Wall Street's going to get what they are expecting on that front. But they're not expecting the kind of guidance we're going to get from the robotaxi network. And that's really where I'm excited. Okay. And I think it leads to a very large rally in Tesla stock. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.